Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which is relied upon as any form of personal advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of which is relied upon as any form of advice at all. It is just general in nature only. The question I'm asking is, have we seen the death of the king? The US dollar has now been savaged off the back of a slightly slower, all right, let's put a bit more on it than that, a much better than expected CPI read that came in well under what was consensus numbers. Came in at 0.4 and at 0.6 month on month differences, 7.7 versus 7.9 year on year differences. And then the one that I think you really need to concentrate on is Core CPI. Core CPI coming in at 6.3 versus 6.5 expectations, down from 6.8 from the previous month, is relatively something to look at. However, it is still 7.7%, and that I think is being slightly lost in where things are at. The other thing that therefore is, and what the champion is being, and why the movement in the US dollar has been incredible, is the idea the Fed now may actually join the rest of the world with regards to slowing down their pace. That may well be the case, and that's fine. But has it slayed the US dollar? Does that mean that the dollar king trade is over? I'm not sure it is yet. The reason I say that is that if you listen to the Fed, they're still saying very clearly that they are going to do whatever it takes to get inflation back to 2%, that yes, slowing is being discussed, but nothing more than that. Slowing doesn't mean stopping. And that's also, I think, slightly lost on this. If you look at the Fed Fund futures from Atlanta, if you also look on things like the ICE, they're all suggesting the federal funds rate could get up to as much as 4.65% by the end of the year, and possibly even as high as 5% midway through next year. That's incredible. And that, for me, still means the US dollar has a very, very strong tailwind behind it. Yes, it has finally seen a little bit of selling, and probably deservedly so. But I'm not sure it's over. And that's why watching euro dollar back above parity, or sterling, which is now back at 117, pre the trust sort of era crises, is all very interesting. It's dollar yen that catches my attention, going from 146 down for 141 and falling still. That is on real yields, and that makes sense. And there is now every chance that, the back end of the curve could start to fall away. That one, I think, is the one that might be dead. The rest of them, I'm not so sure.